Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A battle of the titans in today's episode with Riot, Marathon, and CleanSpark all coming out with May production results on the same day. We're going to be taking a look at the numbers, analyzing, comparing, contrasting, and so much more in today's episode. Before we do though, take a second, hit the like button guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below which of these three miners you think won the month of May and why. With that being said, let's get into today's video. Okie doke, Anthony. Tuesday morning, a nice looking day for the Bitcoin mining sector. Bitcoin itself hovering just above 106, the upper end of this band we've seen over the last 5 days, and the miners off to the races.
Yeah, good day today. Green all round. Bitcoin's up nicely. Sort of the top of the band for, like you say, over the last week, and mining stocks performing as expected. And notably, a couple of good moves on there.
There definitely are. MicroStrategy making a showing today as well. We talked about their capital raise strategy or ATM strategy on yesterday's podcast. Today, we've got a doozy for you guys with three of the heavy hitters in the Bitcoin mining sector all coming out with May production results on the same day, Anthony. We had a podcast planned. We put that one on hold. We said, wait a second, guys. This is big news. We've got Riot, Marathon, and CleanSpark all coming out swinging this month, and you've put together some great comparison tables to help us analyze the data.
Yep, and we've got three to go through. I'll start with Riot. Had a good solid month again. Mined 514 Bitcoin. That's an 11% increase in what they achieved in April. Two reasons for that. First reason is increased days in May. May's 31 days as opposed to April 30. But more importantly, their operational hash rate increased from 29.3 to 31.5. So a nice 8% increase in operational hash rate. That's what they're actually achieving there. In terms of what they've installed at the moment, 35.4 is what they've installed. That was an increase of 5% on the previous month. And they're getting close to that target now. 38, I think 38.4 is going to be their target for the remainder of the year as they now focus the Corsicana site to deliver high performance compute. Now, in terms of other interesting parts, that they obviously sold some power and demand response credits for the month of May, and that totaled $2.2 million. Now, if we put that into Bitcoin equivalent, that's an extra 21 Bitcoin. So again, another good month. That will be a credit to their future energy costs. So it's not Bitcoin itself, but it's just highlighting that they've not only do they achieve Bitcoin when they're mining, when they're not mining, they're also achieving revenues as well in terms of those energy credits and power sales. Now, we know the fleet efficiency around about that 21. It was slightly higher in May, 21.2, and that can be all down to the settings on these machines. Bear in mind, they've got an enormous fleet at Rockdale and Corsicana. In terms of Bitcoin mined per day, 16.6, that's a 7% increase on a day-to-day basis. So you are comparing like for like there. And that's obviously that increase in the energized and operational hash rate that I've already explained. Now, they are selling some Bitcoin now. So up until April last year, they weren't selling any Bitcoin. They were literally hodling everything, and they got to that 19,000 Bitcoin and change. Now it looks like they're starting to sell very close to what their actual monthly production is. So in April, they mined 463, sold 475. And in May, they mined 514 and sold 500. So if you look at the totals of those two there, they've pretty much sold the last 2 months' production to the nearest Bitcoin. In terms of HODL, it has slightly increased by 4 to 19,225. And at the end of May's Bitcoin price of $104,000, that gives them a $2 billion and $12 million HODL. Not to be sniffed at. Now, in terms of what that means against their market capitalization, that's 66% of their market capitalization. And we do highlight that metric because it's just interesting to show you, how the market is reacting to some of these. So, they've got an enterprise value quite low because, in terms of the cash that they've got available, the Bitcoin there, it outweighs the debt of the company. So I think their enterprise value, will come onto it in a second, it's about 1.5 billion. And if you think what they have at Corsicana and at Rockdale, in terms of the amount of machines, amount of new infrastructure, it really means that the market's not giving them any sort of premium at all for their Bitcoin hodl. So 66% there. That's increased from 60% in the last month. That's obviously due to the Bitcoin price. It was 94,000 at the end of April, 104,000 at the end of May. And you think about a 10% rise there, 10% of 60 is 6%. Add it together, 66%. So quick math lesson for all you out there. But overall, a really good update.
Yeah, some great numbers, great analysis there, Anthony. Again, we're going to come back to those a little bit later when we do that comparative table. Now, in addition to the Bitcoin mining news, we just covered that new data center hire yesterday on the channel. They also snuck in a line here about some additional land being purchased adjacent to the Corsicana site. Now, if we look at their most recent investor deck, you can see as part of the feasibility study at Corsicana, this was one of the clear owned land objectives, middle of the page there.
Absolutely. And this will be helping them when they actually do the final building plans for these data centers. It gives them that bit more, opportunity to develop how they want to. That extra land, that's like a third more than what they've got for the whole site at the moment. So, a significant amount of additional land capacity there. Whether it comes with any power, that's a separate question there. But what it means is they can actually now not worry about having things all close together. They can spread things out and have a really good design model there. And I'm sure that with all the attributes that site holds in terms of proximity, in terms of fiber, in terms of power, in terms of delivery, that the company are expected to. They can build data centers. You can see that with Corsicana and Rockdale. This will be a step up, but they'll have a team there ready to implement the data centers when that contract's signed. And I'm expecting something will be announced this year regarding that. There's too much positive news in the air around these Bitcoin mines. They've got the power, and we're already seeing yesterday with updates from companies signing contracts. I expect Riot to announce something this year.
Yeah, I certainly do too. We're starting to see a lot of these feasibility studies being published in the investor presentations. I know we just walked through and did that tour of the Bitfarms facility as well. So very interesting to see these developments continuing to push forward on the HPC front. Now, back to Bitcoin mining, Anthony. Marathon, a tremendous month, 950 Bitcoin. Why don't we walk through that update next?
Yeah, this is a big month for Marathon, and we've scratched our heads a few times at some of their updates coming out there. They're the biggest miner by some distance at the moment, and we go back to that December 2023 when they produced 1,853 Bitcoin. Phenomenal feat. Now we've had a halving since then, obviously, so and the difficulty. Impact is just as bad as a halving when you look over sort of like 12 or 18 months of it. It's absolutely, critical to miners in the terms of what they produce. But this was a phenomenal month for Marathon in terms of what we've seen over the last 12 months. 950 Bitcoin, hash rate increased just slightly by 1 exahash from 57.3 to 58.3. Efficiency improved as well, down to 19 from 19.3. They're not selling any Bitcoin. Fred's hodling all that Bitcoin there. He's obviously following Michael Saylor's strategy in terms of, don't sell any Bitcoin, hodl it, and you'll be rewarded with the fruits of that model. In terms of Bitcoin mined per day, 30.6 during May compared to 23.5 during April. That's a big 30% increase. In terms of Bitcoin mined per exahash, 16.3, that's a big improvement as well. Look at what that was in April there. And difficulty was flat during the month of May. So difficulty itself didn't impact May. It will impact June because we've just seen a difficulty rise. We'll talk a bit more about that in a second. But during May, we had a drop in difficulty and we had a slight rise in difficulty. And we didn't quite achieve where we started from. So it's pretty much a flat month there. So when we're looking at Bitcoin mined per exahash, that's a big jump, 32%. That tells you that they're getting far more out of the machines they've got switched on. In terms of HODL, grown by 2% to 49,179. That's got a value of 5.1 $4 billion as at the end of May. Phenomenal. And to be honest with you, that's pretty much the market capitalization of the company. So their company is valued at 5.2 billion. And the hodl is the same value. So they're not getting any at all premium for all their machines they've got. And they've got something like 322,000 machines and, 15 sites, of which they own, over 6% of their sites now. So, there's value there. And they're just not getting any value whatsoever. So, we're seeing companies out there with hodl getting value more than hodl. Marathon and some of these other mining companies just not really getting that at the moment. Maybe that'll change. But a big month of Marathon, when we look at revenues per month, and you go back to that massive month back in December 2023 where they mined 1,853, the price of Bitcoin then was about 40,000. So, they were probably achieving around about 75 million in terms of revenue that month. This month, $99 million. So a big month. And if you annualize that going forward, that's a $1.2 billion a year from Bitcoin mining revenue. When was the last time we heard a number like that for a year for a mining company? And we've got two other companies chasing them at the moment in terms of CleanSpark and in terms of IREN, in terms of Hashrate as well. Both of those want to achieve 50 in the next few weeks. So plenty of optimism for Bitcoin mining. If you can get them two areas, lower than everybody else, and that is the power price. And Fred, he's spoke many times on power price at the moment. He doesn't see, if power prices don't change, Bitcoin mining's probably got maybe one or two halvings left. Ben Gagnon's actually turned around and said one halving left. He thinks it could be over after the next halving, which is why a lot of miners are pivoting towards HPC. But this is a good update from Marathon today, and we're here to say when it's a good update. We don't just want to say bad all the time. They produced the numbers this month, and they're on par in terms of numbers with both Riot and CleanSpark. So that's a good month, because Riot and CleanSpark at the moment are probably up there in the top three with IREN in terms of year to date. So Marathon had a really good month.
Yeah, some big numbers out of Marathon, and just so interesting as we talk about that HODL as percentage of market cap and look at some of these other companies in the space, the 21s, the Metaplanets, the strategies, and the NAV premiums they're able to achieve, Anthony. Definitely starting to look like some value opportunities here. The other thing I wanted to mention on Marathon, a record number of blocks in the month, 282 blocks. You may be saying to yourself, well, how could it be a record blocks if Anthony just said they did 1,800 Bitcoin in December? That's obviously because the block reward has been cut in half. So congratulations on that milestone as well. Now, you just mentioned CleanSpark, Anthony, as a top contender in the space. They've really been swinging out of the park here all year, continuing to bring on more exahash. Another very strong month in May, now holding a total of 12,502 Bitcoin.
Yeah, no, I mean we there's not many months where you say CleanSpark don't have a bad month. They're pretty much a very much standard good month every month. They're always in that top 5 or 6 of the miners, and this year they're in the sort of top 3. So in terms of mining for May, 694 Bitcoin compared to 633 in April. That's a 10% increase. Obviously, at one day is about 3% of that, but still an increase. Why was it increasing? Well, they managed to add 8% more operational hash rate. So that's now up to 45.6. So they're getting very, very close to that 50. And even in their today's update, they even start talking about 60 exahash. So that's the first time we've heard that number mentioned. Bear in mind, a lot of the other miners have sort of said that's their target, that what they've put in place for the year, and they're not going to go higher. CleanSpark have now decided to come out with a target higher than that. And they're constantly looking for new sites to add to their portfolio. In terms of operational hash rate, which is the average, what they achieved during the month, that was also higher by 6%, 42.5. Operational power increased to 987 megawatts. That's an 8% increase. That obviously ties in with the actual energized hash rate that they've got there. And in terms of efficiency, that's coming down as well. That's coming down a little bit close to where IREN are. So that's 16.71, IREN at 15, and they're the leader of the pack at the moment. But as CleanSpark start adding new S21 miners to their fleet, that number will constantly get closer and closer to the 15 mark. In terms of Bitcoin selling, like Riot, the last couple of months they've been selling Bitcoin as well. So within their production numbers, so they're not selling any of the HODL, so they're just selling some of their production numbers, obviously to cover the the cost of operational costs and help towards some of the capital expenditure. These mining businesses is not cheap at all. You've got to have the money to pay for them. So some good treasury management there by both likes of Riot and CleanSpark in that respect there. In terms of Bitcoin mined per day, up 6% at 22.4. So again, that increased hash rate. Bitcoin mined per exahash, I've already explained, it's on a par with Marathon and Riot. So we've picked out 3 miners today, all neck and neck in terms of what they're producing per exahash. So the stars are aligned for these 3 miners. They are 3 of the biggest miners. And certainly in terms of market capitalization, in terms of hash rate, they're all up there. Obviously, IREN can put their hat in the ring as well with these 3. In terms of HODL, increase that to 12,502, like you said earlier. That's got a value of $1.3 billion as at the end of May, and that's 53% of today's market capitalization. So, again, when you think about the sites they've got over 30 sites, CleanSpark, because they've got a lot of smaller sites. They do obviously look at, they're looking at, the big 100, 200 megawatt sites. They've got a lot of sites, much smaller. And they've been very good at, picking up these sites very quickly, getting them energized, getting mining production done there. And, that's added to their hash rate growth. And, no one expects them to fail at the reaching 50 by the end of the month. They've got now literally, just over 4 exahash to get to that target. And they'll be ramping machines in as I'm talking through this podcast now. So expect that big update in just over 3 weeks' time to say they reached the target.
Yeah, most definitely. And interesting, you talk about Marathon, CleanSpark, both at this point not overly focused or focused at all on HPC. Marathon, as you say, Anthony, being given virtually no value for the underlying business, machines, infrastructure. CleanSpark essentially being ascribed 50% of their company value for the underlying assets compared to HODL. So interesting to break those down. The other thing I wanted to mention, they probably had to sell a couple Bitcoin to finance the advertising campaign in Vegas, really painted the town blue. You can see a number of billboards, posters, airport terminals, CleanSpark advertising on full force.
Yeah, and it was, and obviously at the conference as well, I would say CleanSpark and Marathon from the mining sector were 2 of the sort of the big sponsors in terms of where you could see the name of Marathon had it on the ticker symbol, and all the YouTube videos that are going out. I've got their ticker symbol in the corner there, so getting that presence, known there. This doesn't come cheap at all. So let's see. Hope they get a sort of return on that investment. Some of the miners were less obvious this times. I noticed some of the miners didn't do as much. In fact, we didn't see much of Cypher at all. I don't think they do as many conferences. They do some in Texas, because they're part of the ERCOT, and so more of an obligation really to be part of those conferences there. But they don't really attend any of the other big mining conferences. They obviously feel they're not getting that benefit from it. I mean, it is a lot of money. Some of these companies are putting in millions of dollars in terms of marketing for one conference. And yes, the Bitcoin conference is the biggest conference, 35,000 people there, over 400 speakers. And you're going to get people from all walks of life there. We saw the institutional banks represented there. Literally all the mining companies were there. Most of the people that we talked to on our podcast, we managed to see them in person, which was great. Great to do that. But it comes at a price, and if you're going to do that, and I remember getting off the plane, and there was like CleanSpark advertisements going through the airport. So obviously a lot of work involved. CleanSpark are based in Las Vegas, so they know the terrain over there. And I found Las Vegas, even just for normal, it's an expensive city. Just giving you a heads up now. When you arrive at the hotels out there, and when they mention the tourist tax figure, you think that's the accommodation price. No, that's an additional cost when you arrive in Las Vegas. And then if you want to breathe in the room, that's another cost. So if you want oxygen, you've got to pay for the oxygen in the room. That's not including the room price either. If you want to use more, this was a cracker. If you want to use more than 2 devices, can you imagine going to your room I went to the room and the first thing you unpack and you get your phone and your iPad, you get it connected because, the Wi-Fi's there. And then you need to get your laptop connected because you're not there just to, enjoy Las Vegas. You're actually working. And then the hotel says that'll be another $15 because you've connected more than two devices. But the tourist fee says that covers the internet cost. So you only got so much internet cost. And being one person, it's very difficult to use three devices at once. So I was like having an interesting conversation with the hotel staff at reception on the way out when they tried to hit me with another $60 for 4 days of additional use there. But it's a great city, but bring a big wallet with you. And especially if you go near a table. Fortunately, I managed to stay away from them. I was happy to watch other people play, but it's not for me, to be honest with you. But it's you can spend a few pennies in Vegas if you don't watch yourself.
You certainly can. You were watching me lose all my money on the tables, Anthony. I was having the same type of conversation with the front desk, but it was about my water being out
Yeah.
overnight and no hot water. So, anyways, we digress there. Now, this is where it gets really interesting, Anthony. I want to talk about the comparison between these three miners. So, as we say, three of the heavy hitters, really minus IREN, coming out of the gate all on the same day. You've put together a great table here, allowing us to compare apples to apples between each one of these industry giants. So why don't you walk us through this and some of the more interesting metrics, enterprise value to total hash rate, some of these apple-to-apple comparisons that really draw a lot of insight.
Yeah, I mean, in terms of the mining, these are at the moment sort of like the three of the biggest there. There are companies, you've got to remember Bitdeer, market capitalization puts them as the fourth biggest miner at the moment, ahead of CleanSpark, and Core Scientific, who effectively are going to pivot massively into the high performance compute with their great deal with CoreWeave. That's from a different perspective. But if you're looking at mining at the moment, you've got the likes of Mari, you've got the likes of CleanSpark, IREN, Riot. They're the four biggest hitters there. After that, you've then really got to go down to the likes of Bitfarms, and that's literally a drop of 50% in terms of hash rate. So it's quite interesting to see these three on the table at the same time. So in terms of installed hash rate there, Marathon's still, ahead of these two. But bear in mind that the catch up that Riot, CleanSpark, and IREN that aren't on this table have done over the last 18 months is nothing less than phenomenal. They've had some big increases in hash rate, all three companies. Marathon have grown theirs a bit more. They've grown over the last 2 or 3 years, in fact, so they've managed to grow that at a more linear rate. But the other three have had to grow really quickly, and they've had to because Marathon set the tone of the hash rate and want to have their share of the global hash rate, and these other companies now are doing that. Riot have decided, 38.4 is going to be there. That's going to be enough for them. They've then got this 600 megawatts, which is, unique when you compare literally every other mining company out there. There isn't another mining company at the moment with a site that's already developed to deliver 600 megawatts. Yes, there are some sites out there with potential in the future once the power's been all the power's been set up and all that. Some 1-2 gigawatt sites, but we're talking about sites now that are developed where there are 500-600 people working on these sites. And they're not just a fence with a terrapin waiting for things to happen. This is real. We've been to Corsicana. We've seen what it's like there. We've tasted the brisket barbecue there. It's a great facility. And now having that extra land that can really help them sort of like design something that's really suitable for a really big client. And as I say, expect that to be answered there. CleanSpark, they were going to remain Bitcoin mining. That's probably, that partly down to the fact that, they feel they can maintain a really good portion of the global hash rate, which they're doing that. If they're going to get to 60, that's going to be, upwards, 7% of the global hash rate. That's going to be a big deal. The thing is, they've got so many small sites. I think the challenge for them would be how do you start converting smaller sites into HPC? You need some sort of like bigger sites really in terms of getting all that pecking order there. Every mine that's looking for co-location, you're looking at 200 plus megawatt sites. Even the likes of Bitdeer have got 2 or 3, Cypher have got 2 or 3 over 200 megawatts. We've talked about TeraWulf at Lake Mariner. They've got over, 250 megawatts available there. These are big sites with a lot of power available. CleanSpark haven't got that at the moment, so that's why they're probably focused on the mining side there. And as every miner decides to stop growing hash rate, it's probably positive for them because they can just continue to increase, continue to keep up with that global hash rate. Because if the North American public miners aren't growing, you can bet your bottom dollar there's miners around the world that are growing elsewhere and just tapping into maybe cheaper energy, free energy, stranded energy, stolen energy, whatever you want to call it, energy all over the place. And so CleanSpark are going in that direction there. Marathon's the interesting one. What are Marathon going to do? So they've said they're not really going to go into HPC as per having these big co-location sites. But what they have said, which is quite interesting, this is another take on it, and I think I'm going to do something on an article about it because it's really interesting in the fact that how the Bitcoin mining can support HPC in terms of load. And we know that in an ideal world HPC relies on a lot of power and a lot of uptime, but in the instances where it's not required, what do you do with the power that's available there? Bitcoin mining is the perfect business model to utilize power that's stranded or that's not being fully utilized in an area. And that doesn't just mean HPC business, that means all businesses, all areas. And so Marathon are looking to tap into that maybe more. And being the biggest mining company, let's hope they can start to maybe utilize some of the power of the size of the company to deliver some really cheap power. Because that's probably where they've been struggling in the past. It's not necessarily always about production. It's sometimes about the power cost, hosting costs. That's going to be alleviated a little bit because they're actually buying their own sites now, more control, less hosting fees there. But the power still needs to be, lower to compete with some of the other miners. We know IREN, we know Cypher. Riot came out this month. I think it's 3.8 cents this month, and their update in terms of power cost there. That's a good power cost. Be interested to see what IREN put out because I expect that to be lower because all their power comes from Childress and it's all at market rate. Riot have the Rockdale facility, 345 megawatts. That's on a PPA at around about 3.8, 3.9. So that looks to me that maybe the power cost it could be cheaper for IREN when it comes out there. That'll be time will tell. But they've been hovering around 3.2 cents the last 3 months. Really good rates. Cypher have great rates as well. CleanSpark on the other hand, I think 4.6 is what they quoted in their latest earnings update there. So 4.6, it sounds low, but it's 50% more than IREN were paying, and that 50% is where the difference was in terms of the earnings results. IREN were able to achieve an overall profit, taken into all costs, including depreciation, including stock compensation, all of them. CleanSpark and the other miners weren't, and CleanSpark, probably because of the power cost, because they've got great efficiency. They mine really well, but that power differential between what they're paying across all their sites and what IREN are paying across just a couple of sites is massive. And power is your biggest cost over the period. Yes, you've got to buy the mining machines, but power's an enormous cost to buy. And these machines use a lot of it. So just carrying on there in terms of power sales, this only applies to Riot. They're able to, in ERCOT, they're able to, use demand response programs, so they can switch off when the power price is high and have the ability to sell that back to the grid. And they got 2.2 million during the month of May. Now we saw a couple of years ago during the summer months, during those 4 months, June, July, August, September, when it's the four biggest months of the year, they were achieving, 1 month they achieved over 30 million in power sales. It wasn't as high last year, so obviously it depends on the weather, depends on the demand. But, they're pulling, I looked at the last few months, they're pulling nearly $2 million a month at the moment. That's, it represents 21 Bitcoin if you're doing the equivalent there. And if you add that to their total, that means that they actually did better in terms of what hash rate they've got than both Marathon and CleanSpark. Because, not many companies, when you switch off, are still able to earn, potential revenues or potentially reduce costs. It's the same effect to the company financials.
Yeah, it's a great point you bring up there, Anthony. And just another way to look at this would essentially be pure profit. There's no direct costs associated with this as they're just turning the facility, the machines off. Is that correct?
That's absolutely correct. It really is. It's a reduction in their future cost. So if they get their future energy bill, and say the next energy bill is, I don't know, $10 million, then that's, $2.2 million comes off that bill. So it's just pure reduction. And that's the same impact as having, additional 2.2 million revenues to the bottom line. So if you can reduce costs, that's one way of improving your profits as a way of increasing your revenues. Um, and so yeah, so here you've got the three miners with effectively the biggest hodls. Marathon close to 50,000 now, and they've been literally hodling since we've been looking into mining stocks. Way back in 2021. Riot also got a really good target over 19,225. That's worth 2 billion on at the moment there. And CleanSpark again, if you're looking after strategy, these three companies probably come, literally second, third, fourth, or second, third, and fifth, something like that. They're in the sort of top five, all three of them. So, really shows you the setting the ways there. They firmly believe Bitcoin price is not here to stay. It's going to go a lot higher, and that's their strategy. And if you speak to Jason, you speak to Zach, and you speak to Fred, I'm sure they'll say exactly the same there. They expect the long-term expectation this price will go up. And everything we talk about in this podcast over the last sort of like 6 months, 8 months, has all been really positive news. Yes, we've got some, a couple of global wars out there, but they've been out there for a while now. And, there are some macroeconomic issues around the world, but the Bitcoin price, has been beaten by that, but it just seems to recover very quickly. So you might see a 5% drop one day because of a news story, but the next day after it increases by 6%, and you're back to where you were. So, very resilient Bitcoin, and they firmly believe that. You get an equal and opposite answer from other miners who've been selling the Bitcoin. They firmly believe it's better to sell the Bitcoin and to use that Bitcoin revenue to grow the business. And the likes of IREN and TeraWulf have done that really, really well. We get down to market capitalization. Obviously, Marathon, the biggest mining company, over 5.3 billion. Then you've got Riot at 3.1 billion. So there's a big difference in valuation there. And that really is because they have got this massive hodl. The hodl is worth the market capitalization, as I said earlier. It's worth 5 billion. So they're getting the credit for that there. They're just not getting credit for anything else. And yes, people out there will say, yeah, but they've got those two big convertibles. Yes, they do have those two big convertibles. They're about $2 billion. So they have got some significant debt on the balance sheet, but they also have cash on the balance sheet. They also have assets on the balance sheet, and they've got a ton of assets on the balance sheet. So, you look at the enterprise value, that takes into account the market capitalization, add the debt onto that there, and then deduct the Bitcoin and the cash equivalents, and that gives them an enterprise value of $2.4 billion. And if you divide that $2.4 billion by their total hash rate of 58.3, that gives you a cost value at the moment of each exahash, and at the moment Marathon is valued at $42 million per exahash from a cost perspective. Now, don't fall into the trap of thinking 42 is great because it's a bigger number than the other two. It's actually not. You want that number to be as low as possible. That means you've got a better valuation in terms of the cost of what the market perceives the cost of that at the moment. So we do the same for Riot. They've got a really low enterprise value because they've got that great hodl. They've also got quite a lot of cash in the balance sheet. And the reason they've got cash in the balance sheet is they have the PPA there, which we've already talked about, and they have to have sufficient cash reserves to cover any potential margin calls on that PPA. So, but when you divide the hash rate into their enterprise value, you get 41 million. So just slightly better than Marathon. And then for CleanSpark, again, they've got some debts on the balance sheet. They've also got that significant hodl. Their enterprise value, 1.56 billion. Their enterprise value divided by hash rate at the moment, $34 million. So from a cost value perspective, that actually highlights a better position than the other two there in terms of, if you're buying into that, you're buying into a better value in terms of the hash rate. Again, it's one metric, but, some of these valuation metrics do align with each other. So, you can make your own mind up as to how you want to play that. But I thought interesting just to include some extra data as we've got the these three big miners released on the same day. I thought it'd be useful to do that.
Yeah, it is really useful to do that, and I've enjoyed listening. Now, just to confirm, Anthony, you said convertibles are considered debt. Those would be factored into the enterprise value
Absolutely.
calculation.
Absolutely.
Great. So that does take that into consideration. Now, the other final piece we wanted to bring up here, you guys, just a quick look at the Hashrate Index here. A couple of headwinds on the horizon for the miners. So difficulty, unfortunately, did go up again by about 4.4%. Hash price is down now in the $52 range, and we're still seeing fees flirting with only that 1% level. So although a strong month for these top mining contenders, again, a couple of headwinds on the horizon.
Yeah, that 4.3% difficulty change a few days ago is not going to help miners because that's effectively going to impact straight on their production for the month of June. And 4%, and you have another difficulty coming up in about 12 days' time. If that one's another increase there again, you could end up 6% short. So, if you said, June's only going to be 30 days as well, so we know the production numbers are going to be down already by 3% because it's a month late there. But if you look at, say, Marathon there at 950 Bitcoin, that's going to be the best part of 58 Bitcoin down just on the difficulty for that one day there. That's a big chunk gone already. So it doesn't help the miners. The Bitcoin price, obviously needs to compensate them for that, and we need to see the Bitcoin price increase well over 110,000, start giving them back enough revenues to cover that drop in productivity. But as Bitcoin price rallies, what's happening now is you're seeing more and more miners go onto the global hash rate because you might find people who took miners off because they weren't operating profitably at one price point, which could be 95,000, but now at 104, 110,000 or whatever it is, it could be profitable to switch them on and get some margin. And so that increases the difficulty again because the hash rate's increasing. So it's a bit like a hamster wheel. It's everyone's affected by it. And as Fred says, the only way this is ever going to work for mining companies in the future is if the energy price gets as close to zero as possible. And we're nowhere near that at the moment. Even those at 3 cents, that's still a large amount of expenditure to pay out for each Bitcoin mined.
Yeah, it certainly is. It's a tough industry, Anthony. We've covered that extensively on the channel, but today, a strong day for the miners and great to see some big numbers coming out of these top contenders. So guys, let us know in the comment section below which miner you feel won the month of May and why. If you're still watching at this point, make sure you hit the like button. Feel free to subscribe, and we'll see you back here tomorrow.